Okay, guys, good morning, all. Let us start with the problems part of leverages now. Okay. Now we had a very strong introduction of how leverages are, how we can calculate, what is the purpose, and how they help us to measure the risk and compare the companies and compare the business over a period of time. With that understanding, we have also divided our problems into four segments: operating leverage problems, financial leverage problems, combined leverage problems, and all leverages put together in a single problem also we will be seeing. Okay. With this, let us restart with problem number 1a, right? Okay. What does it say? A company produces and sells 10,000 shirt. The selling price of the shirt is rupees 500 per shirt and variable cost is rupees 200 per shirt. Fixed operating cost is 25 lakhs. Calculate operating leverage, first bit, and second bit is if the sales go up by 10%, then what will be the impact on EBIT? So this also we'll see, right? Let us come. Problem 1a, selling price per shirt rupees 500. Again, variable cost per shirt, how much it is, dear? 200, right? So what is my contribution per unit? 300, right? Very good. Now, how many number of units am I supposed to sell? So what is my total contribution? 30 lakhs. Very good. Now he says less fixed cost 25 lakhs, right? I get my total EBIT of 5 lakhs. Are we all good here? Done. Now with this, can we calculate our degree of operating leverage? So what is degree of operating leverage? Contribution divided by EBIT. So how much is that? That is 6. So this is a bit riskier business only because fixed cost is very high. Okay. So this is our first bit answer. Basically, if this question comes for 3 marks, we'll get 1 mark for this, 1 mark for this, and there is one more bit which we are supposed to do, that is what would be the impact on EBIT if the sales, or you can say contribution, increases by how much? 10%. Okay. So one way is a pretty simpler way to do it. Increase this by 10%, right? So that would be 33 lakhs. Then again minus your fixed cost, because fixed cost will not change. You will reach to an EBIT level of 8 lakhs, right? So what is an impact? Impact is 3 lakhs. But in the examination, even if you do this way also it is correct, but what you have to understand what examiner is expecting from you, right? What examiner is expecting in this problem is you are aware of both the formulas of operating leverage. That is what the objective of the problem here. We can redo it. He has to give you marks. That is altogether fine. But at the same point of time, it is also must that you showcase your knowledge to him, right? So what you can do is, again, you will use a different formula of degree of operating leverage. Can you please tell me? Percentage change of EBIT divided by percentage change of contribution. Yes. Now, let me just expand this formula. How do you calculate a percentage change of EBIT? How do you calculate the percentage change? So, it should be what? New EBIT minus old EBIT by old EBIT. Yes or no? Yes, that is how it has to be calculated. Same thing, divided by new contribution minus old contribution divided by old contribution. Yes or no, guys? Yes. Though this whole stuff is given as 10% already in the question itself. Are we all good? Yes. So how do we compute this? So new EBIT we don't know. New EBIT we don't know, but degree of operating leverage is already calculated to be at 6 minus old EBIT is 5 lakhs divided by old EBIT. This concept is nothing but change by base. If you have to calculate anything in terms of percentage change, it is nothing but you have to take the change divided by the base from where it actually started. There is a chapter called sensitivity analysis in your capital budgeting in your module 2 investment decisions. In that, sensitivity analysis is completely based on this simple concept, change by base. Okay, when we come to that, I'm just giving a briefing how important this small thing could be, right? Yes, let us calculate divided by how much it is, 0.1. Sure. Yes. Again, let me just redo it. Can I rewrite this as 6 is equal to new EBIT minus 5 lakhs, and I take this 5 lakhs in the denominator. Done? Right? So how much it would be? 50,000. Sure. Are we all good here? I'm just simplifying the whole stuff, right? In the coming problems, we might not go in so much of detail, right? Because there are some other problems also again which is based in similar formulas of this one. But then we will not show this detailed calculation. Even in exam also, if you skip some steps, it is no problem at all. Because examiner want a simple two-step formula change. It would be, you can write down change EBIT divided by 5 lakhs divided by 0.1, and straight away in the next step you can give the final answer also. It is no problem, you get 1 of 1. Okay, so do not worry, because what happens in the examination, you cannot waste time. If there are few things which you can easily do on a calculator, need not write, right? Until unless you are confident that you need not have to put on the paper for your own confidence, you can straight away write the final answer, no problem at all. Are you able to understand? I'm just giving you the tips when you, how do you save time in the examination. This is at least taking 10-15 seconds every step, right? So you can just omit the steps. You can straight away from here, you can directly jump on to the next one and next one. Sir, will there be any problem in the exam? No problem at all. Until unless your final answer is right and you have given him the correct option of doing it, there is no problem at all. Are we all good? Yes. Let us solve this further. So how much it will be? 6 5s are 3 lakhs. So 3 lakhs, I am just bringing this 5 lakh this side, so it will be plus 5 lakhs, minus will become plus, is equal to new EBIT. Right? Are we all good? So we have got new EBIT of 8 lakhs. Right? Are we all good? So again, the question is what is the impact? So you have to show the impact in terms of percentage or value. So in terms of value, the impact is 8 minus 5 lakhs, that is old minus new, that is 3 lakhs. Okay. And in terms of percentage, the impact is 3 lakh by 5 lakh, that is 60%. Are we all good? Yes, make a note. So can we continue to the next problem? Sure. Question number 1b, again it is a study mat problem. Calculate the operating leverage for each of the four firms A, B, C, D from the following price and cost data, right? So there are four firms. Again, I believe we are supposed to calculate the degree of operating leverage again. So selling price, variable cost is given to you. Calculation, what calculation can you draw with respect to the levels of fixed cost and degree of operating leverage results? Assume the number of units sold are 5,000. Easy to do? Yes. Let's try to do it. One B. You can do it parallel to me if you are confident of solving it. No problem at all. Okay. Yes. I'm just putting a format up. So selling price per unit, variable cost per unit. Yes. This minus this, I will get contribution per unit. Right. Then number of units. Let us name this as 1, 2. So 3 would be equal to 1 minus 2. Then name this as 4, and then 5 would be equal to 3 into 4. Are we all good? So what would be the 5 total? Contribution. A, B, C and D. There are 4 firms. I am referring question from the handout which I have with me so that I do not have to jump on to the question and come here. Okay. So 20 is my selling price over here. 32, 50 and 70. Again you will have 6 as a variable cost. 16, 20 and 50. So we'll have 14, 16, 30 and 20. Number of units 5,000, 5,000, 5,000, 5,000. Can somebody tell me the contributions for each value? 70,000, 80,000, 1,50,000. Sorry, 1 lakh. Again, can I write sixth fixed cost? Yeah. So fixed cost is 80,000. So in the first problem, I can see we have a negative EBIT. That means negative degree of operating leverage. Then again 80,000. Oh, sorry, it is changing every time. Okay, 40,000, 2 lakhs and 0. So we have a perfect operating leverage in the fourth category. I can tell you upfront. Can somebody tell me why we have the perfect operating leverage? No fixed cost, no operating risk. No operating risk, no operating leverage. If you remember year 3 discussion which we had yesterday. Okay. So how much is my EBIT? Then EBIT would be how much? That is 7 is equal to 5 minus 6. So negative 10,000, positive 40,000, negative 50,000 and positive 1 lakh. Right? Again I am writing DOL also. So that would be 8. That is nothing but how? 3 by, very good, 3 by 7. So here it would be minus 7. Here it would be 2. Here again, oh sorry, contribution by EBIT 70,000 is the contribution, right? 70,000 divided by 10,000, 7. 80,000 divided by 40,000, 2. 1 lakh 50 divided by 50, 3 negative. And 1 lakh 1 lakh 1. Right? Yes. This ends your problem. If you do it in this way, I don't think so examiner would have any doubt in his mind that student doesn't know a single concept. Even you have shown this side how the numbers have been derived. So this will come for at least 3 to 4 marks. So we'll have 3 to 4 marks. Each company would be 1 marks. A, B, C, D. Got it? Okay. Yes. I just want to, if you can just hold on to write, I will give you time to write. I just wanted to give you little extra information. So this is not required from the question perspective. Can I plot this number on a graph? My question is, can I plot these numbers on a graph? Suppose this is the 4 scenarios of a company. Will that be feasible to plot? These numbers are not plottable because this belongs to 4 different firms, right? But suppose all the four different firms belongs to one industry. Suppose these are all Tata Motors, Maruti Suzuki, Hyundai Motors and Kia Motors, then it is belonging to one industry. Then a person who wants to analyze the industry want to see in a single paper, then he can plot it on a graph. Yes. So what he will see, some firms are able to do or are having a positive leverage. They have a risk, but still they are able to make a some profit. And some firms, that is almost 50% of the firms, are not even able to make an operating profit. We are only at an operating profit level. There is so many other expenses which are yet to be deducted. Okay, so this will give him an impact as a investor. If suppose I want to invest some amount, what would be my prerogative? I would think this is not a good industry to invest in, because 50% of the firms are not making profit, right? And another 50% of the firms are having a high leverage, except one firm, right? There is only one exception to the whole industry, that is D. Otherwise, everybody has a pretty high leverage and negative profit. So, is this a attractive industry to invest? So, that is how the application of leverages will happen in a practical world. Done? ठीक है? Sure, sir. Sure. Make a note. Okay, guys. Let us start with the next problem. Is it okay? Done? Okay. Question 1C. X Limited has estimated that for a new product, its break-even point is 20,000 units. I will tell you what is the break-even point. Let us read out the whole problem. If the item is sold for 14 per unit and variable cost is 9 per unit, calculate the degree of operating leverages for the sales volume of 25,000 and 30,000. Right? This is a little trick problem. You should have some basic analytical skills. Basic, not advanced, only basic analytical skills. Let us write down. Answer 1C. What does it say? What does it say? Sir, I have a break even point. Yes, in terms of number of units. That says 20,000. What do you mean by break even in financial terms? Yes, a position or a situation where there is no profit, no loss. That means generally whenever a new business starts, what is the first question you'll ask that businessman? That when are you going to break even? That means when are you at least able to make that much of money which is going to take care of at least your business expenses, right? Right. So break even can be denoted in terms of sales value. Break even can be denoted in terms of number of units, anything, right? If I sell 10,000 units, I will be able to break even. right? There could be so many things which is possible. Are we all good? Right? Even in case of institutions also, like education institution, I should have minimum this many number of students. Only then I will be able to bear the cost of students, classroom, rental, everything, right? So they will do their cost analysis first, then start a business, correct? So this company also did a break-even analysis and said at least 20,000 units we are supposed to sell. At least. For doing what? At least getting a zero profit, zero loss, right? That means at this break-even point of 20,000, right? My selling price per unit minus my variable cost per unit will give me contribution per unit. Then I will multiply this with the number of units, I will get total contribution. And once I get my total contribution, again I will deduct fixed cost. And if I deduct my fixed cost, I will get something called as EBIT. And at 20,000, my EBIT is 0. Yes, the first word, what does it mean is, after doing whole process, I will get the final answer as. Are we able to understand this? Yes. Now let us see what all the numbers he has given to us. He says there are 20,000 units already we have written. He says then you will have a selling price of 14 per unit, variable cost of 9 per unit, then you will have a contribution of 5 per unit. Are we all good? Right? Then this 5 multiplied by 20,000, I will get a 1 lakh. So this far information is given in the question. Are we all good? We already know the answer will be 0. So how much should I reduce from the contribution as a fixed cost so that EBIT will become 0? 1 lakh only? Yes. So 1 lakh is my BF, not boyfriend. What does BF stands for? Very good. Balancing figure. So I have calculated this as a balancing figure. So by doing this exercise, what we have found out? Fixed cost. Let us move on to the second bit. What does he says in the second bit? Calculate at 25,000 units. Yes or no? Does he say this? Calculate at 25,000 units. Right? Yes. So now what would happen? Only one thing which is changing is number of units 20. You can write down as scenario 2. 25,000 units. Selling price remains same. Variable cost remains same. 5. 5 into 25,000 would be how much, my dear? 1 lakh. Now whether my fixed cost will also change to 1,25,000? Somebody says yes, then you are weak with your concepts. So fixed cost would remain fixed. So it will be again 1 lakh. My EBIT comes to. Can I repeat this exercise for one more scenario? What they have given me for 30,000 units? Again same 14 minus 9, we have got 5. So it will be 1 lakh. 50,000 minus 1 lakh, I will have a EBIT of 50,000. Let us find out the final answer. DOL. DOL is nothing but what, sir? Just for one sake I am writing the formula again. Contribution by EBIT. So in my case here, contribution EBIT is denominator is negative. So basically there is no DOL. So there is no DOL, right? It would be basically infinity number. So but basically there is no DOL. That's why he has not asked you also to calculate DOL for the first bit. He has only asked you to calculate DOL for second and third bit. So how much it will be? 5. 1,25,000 divided by 25,000, and here it will be 3. So risk is reducing as the number of units goes up. As we do more and more sales, our risk reduces, our ability to take more fixed costs increases, right? Yes, make a note here. Yes. Now, next problem require little bit of explanation. Only then we will be able to solve it. Before we start reading out the problem, hear me out. Right? Beta. Have you heard of this terminology earlier? Yes. Maths me you would have heard, right? And which you would have obviously not liked. I know. Okay. But when we go to a chapter by name cost of capital, do we have a chapter by name cost of capital in your curriculum? Right? Yes, that cost of capital chapter will take this discussion at little stretch because there is a concept called capital asset pricing model in that chapter. So there we will take it at little more detail. But for the purpose of understanding this problem, beta is also a calculation which is done in order to find out risk. Operating leverage, finance leverage is also a calculation in order to find out risk. Are we all good? Yes or no, my dear? Similarly, beta is also a calculation in order to find out risk. All calculations of risk has a purpose. Like operating leverage calculation has a purpose of calculating the risk because of fixed business cost. Financial leverage has a purpose of calculation of fixed finance cost. Similarly, the combined leverage is about the total risk involved. Similarly, beta is a risk calculation which denotes how riskier is your company as compared to the market in which it operates. Again, I repeat, if you wish, please make a note. Beta, write down. Beta is a risk calculation. Beta is a risk calculation which denotes. Beta is a risk calculation which denotes the riskiness or sensitivity or impact. Yes, it could be termed as anything which measures the risk or impact on the company or a firm, on the company or a firm because of change in the industry or market. Because of change in the industry or market. Right? Are we able to understand this? Let us take one more mathematical example here. Suppose for an example, ITC Limited is a stock which operates in NSE, that is National Stock Exchange. ITC beta is suppose say 0.9. How much the ITC beta is? 0.9. Are we all good? Yes. Now Nifty as an indexed changed by suppose say 5%. That is a very big move. Just for the calculation I am taking 5%. Is changed by how much? 5%. So how much change will happen in the ITC? Overall market changed by how much? 5%. Beta of ITC with in respect to the market is how much? 0.9. So how much change will happen in the ITC if the overall market changes by 5%? That would be 5% into 0.9. So ITC will change to 4.5. ITC will change to how much? 4.5. This concept is very important because when we go to cost of capital, the same concept is repeated. Are we all good? So that means if beta is less than 1, please Give me the answers. If beta is less than 1, then stock is more riskier than the market or less riskier than the market? Stock is less riskier than the market. Are we all good? If suppose you assume the markets are going to fall, which stocks you will like to invest? Very good. The stocks with less than 1 beta, because your stocks will fall lower than the market. But if your assumption is other way, you assume the markets will go up, then in which stocks you will invest? The stocks which have greater than 1 beta. Are we all good? Are we all good? Yes. Let us come down, sir. Let us now look at problem number 1D. Now let us look at problem number 1D. What does it say? The following summarizes the percentage change in operating income, percentage change in revenue, and betas of the four pharmaceutical firms. Firm PQR, RST, TUV, WXY. How much is percentage change? 27%, 25%, 23%, 21%. How much is percentage change in operating income? 25, 32, 36, 40. Okay. These numbers are okay. Why? With this easily we can find out DOL. You have percentage change in operating income, that is nothing but percentage change in EBIT, that is your numerator, divided by percentage change in sales, that is nothing but percentage change in contribution, so that is your denominator. So simply your DOL would be how much? 25% divided by 27%. Are we all good? Yes, right? Now problem doesn't end here. Calculation is simple. Analysis starts when you see this. You will calculate operating leverage for the four firms. You will find out some operating leverage. Then you have to see whether the operating leverage is in sync with beta. Can you see the last column? Betas of the firms are given, and I can pretty much say the firm WXY is more riskier than PQR. Can I say this statement? Can I say this statement? Whether if I calculate operating leverage, will it give me the same answer? Let's find out. ठीक है? चलो, let us find out. Let us find out. One D. PQR, RST, TUV, WXY. Particulars. Yes. What is the particulars given? Percentage change in revenue. Then percentage change in operating income. I'm just writing it directly EBIT. Tell me the numbers, sir. 27%. I will directly write it 0.27, 0.25, 0.23, 0.21. Similarly, EBIT 5. So degree of operating leverage, can I say it is 2 by 1? If I name this as 2 and if I name this as 1. How much it will be, sir? 0.25 divided by 0.27. How many decimals? Let us take 4 decimals. 9259. Then 1.28. Then 948. This is your first bit answer. This is your first bit answer. Is this your first bit? Calculate the operating leverage of each firm. Yes. Second bit. Second bit. Use the operating leverage to explain why these firms have different beta. So with the operating leverage, one thing we conclude, with operating leverage, we can conclude that WXY Limited is more riskier than TUV, and in turn TUV Limited is riskier than RST, and ultimately RST is riskier than PQR. Yes, as beta is a denomination, is a risk factor which denotes risk of the firm as compared to risk of the firms as compared to market, and we conclude that beta is in increasing trend from PQR Limited to WXY Limited. Therefore, with the help of operating leverage, I am writing a short form OL, we can conclude is least riskier than all other firm, and WXY is most riskier than any other firm. Yes, so this is your conclusion. This is your conclusion. For this writing, you will get 1 mark. Yeah. ठीक है, प्लीज मेक अ नोट। Now you have a similar problem, but here they have all not only asking you calculate the operating leverage but also the combined leverage. Can you quickly do it? Yes. Problem number 1E. Let's see if you can do it before me. One E. Yes, again. Firm P, Q, R and S. Percentage change in revenue, percentage change in EBIT, percentage change in EPS. Is this three numbers given to you? So that is, write down 0.27, 0.25, oh sorry, 0.23. What is EBIT now? 0.32, 0.40, 0.3, yes, first bit DOL. If I name this as 1, 2, 3, please tell me what would be DOL formula? 2 by 1. Yes, can you please give me the answers, dear? Next. Degree of combined leverage should be 3 by 1. Done. So I believe so far we are very comfortable with operating leverage, right? Okay. Can we move on? Can we move on? Now next one, financial leverage, right? So this problem looks little longer. Please read out the problem with very utmost care. Question 2A. And this is also an old syllabus problem of for which has come for 8 marks, right? Delta Limited currently has an equity share capital of 10 lakh rupees consisting of 1 lakh shares. That means each share face value is how much? 10 rupees, right? So each share is how much? The face value stands to be 10 per share, right? The company is going through a major expansion plan requiring to raise how much? More 6 lakhs is required. How much is my current capital? 10 lakhs. How much more I need? 6 lakhs. To finance the expansion, the management has following plans, right? Issue 60,000 shares of rupees 10 each. Matlab total funding take it from equity. Second plan, take 40,000 shares, that is 4 lakhs from equity, and balance 2 lakhs at a 12% loan from a bank. Are we all good? Yes. Then plan 3 is, will take 30,000 equity shares, that is 3 lakh rupees from equity, and balance will issue debentures at 9%. Now a simple question should spark in your mind, is there a relevance between plan 2 and plan 3? This is not forming part of your answer, just in order to improve your understanding. What is the relevance here? Yes, the interest rate is going down from 12 to 9. Yes or no? Why? Instead of taking loan from a single lender, in the plan 2, can you see a long term borrowing at a 12%? So that means he would have taken it from a single lender. That is how much? That may be banker. Instead of taking from a single lender, lender would have a bigger say and he will demand a higher interest. But when it goes to a group of people who cumulatively aggregate their values and give a loan, then their say will become very less, right? So the interest rate has come down to 9. Can you see this? Yes. So that is why it is 9% is through debentures. Fourth plan again, because I will give you certain other extra privileges apart from debenture holders, I would give you lower payout. So the fourth option says 3 lakh from equity, only 6% preference shares. So the cost is again further reduced. Whenever you issue a preference shares, it is much better than a debt, generally, because it comes with the option of converting into equity at a later stage. Okay, so this is how the overall stuff is. The EBIT of the company is expected to rupees 4 lakh per annum. So EBIT is given. Corporate tax is 40%. Calculate EPS in each of the above plans. So you have to make an income statement from EBIT level till below, right? And ascertain the degree of financial leverage in each plan. Can you do it? Yes. Let's see. 2A. Particulars, plan 1, plan 2, plan 3, plan 4, right? EBIT minus interest. I'm leaving one row down. This row I'm not writing anything because I will show you in this row the calculation of it. Minus what I would get here, EBT minus tax fixed percentage, that is 40. Done. Then you will have EAT. Is it EAT for equity or any further deduction to be done? Preference. Again I'm leaving one more row so to show the calculation. Got it? Yes. What I will find out now, is it sufficient? No. Then again I need number of shares. OS stands for outstanding. Okay. You are not an outstanding student, but the shares are surely outstanding. That means due or raised. Yes. So again we'll leave one row for calculation of outstanding shares. Then what we will be able to get? EPS. Sure. Done. If I take this as 1, if I take this as 2, then EPS would be 1 divided by 2, right? One thing is for sure, EBIT for each plan is 4 lakhs. Interest is the first plan is 0. Second plan is 2 lakh into 12%. Now you know why I have kept this row open. Why? Otherwise I have to make a working note. So why do I make such a small working note? I have been showing the working here itself. So that would be 24,000. Again, here you will have 3 lakh. Again 0 here. So how much would be my EBT? 4 lakhs, 3 lakh. Again here, done. 10% tax is 40,000. 40,000 into 4, 1 lakh. 1 lakh 60,000 tax. Yes. Can somebody tell me the calculation for 376 also? So it is 376 into 0.4, 1 lakh 50,400, right? Minus is equal to, then 373 into 0.4, 1 lakh 60 again. So you have here we will have 2 lakh 40, and in the last one also we'll have 2 lakh. 2 lakh 25 600, then 373 minus. First three options there is no preference capital. Only in the last option You have 3 lakhs into 6%. So that would be how much? 18,000. How much is EAT for equity, dear? 240, 225, 600, 223, 800. Yes, let's calculate outstanding number of shares. 10,000 old shares plus 6 lakhs completely through shares. So how many new more shares? 6,000 shares. So total how much? 16,000 shares. Come to the next one. 10,000 old shares plus 4,000 newly issued shares. So it will be 14,000 new shares. Again, 10,000 old shares. Oh, sorry. 1 lakh. Oh, I've taken 110 less. Okay. So plus 60. So this will become 160. So 1 lakh plus 30,000 and same again 1 lakh plus 30,000. How much would be my EPS dear in the first option? 1.5. Second option. Third option. Fourth option. Round off, it will be 1.71. Yes. And I believe now you can also calculate financial leverage, right? Yes. Write down. Write down. Once you complete, we'll come back to financial leverage calculation. Are we all good here? Done. Can we calculate the financial leverage? Yes. So now a simple formula would be sufficient only in the except third formula, fourth one. That is plan 4. Plan 4 में you have to take pre-tax post-tax. So you have to do that tax adjustment. ठीक है? चलो. So this is your first bit. Very happily you have got 2 of 2 or 4 of 4. Then degree of financial leverage. So how much is degree of financial leverage in the first one? It is pretty simple. No interest at all. No interest, nothing, right? So it would be what? EBIT, EBT. That is same. One, second one. Is there any change? It has to be same EBIT by EBT. So that is 4 lakh divided by 3,76,000. How much is that? Again, fourth one. Now the fourth one is important. EBIT into 1 minus tax divided by EAT for equity. That is 4 lakh into 1 minus zero point 0.4 divided by 2 lakh 22,000. That would stand to 2 lakh 40,000 divided by. Please make a note. Hello. 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 Okay. Hello.